Hello, my fellow loaves. Welcome to my first ever YouTube video. There's just over 3 weeks left to 2022, and one thing I want to do next year is to share this public portfolio with you every week. So I'm using these 3 weeks as some practice since I've never created any videos before. Just for some context, this is my smaller stock and options portfolio on Tastyworks. The account value is about $50,000. My strategy is mainly to sell put options on high quality dividend stocks I want to own until I get signed. I do have a recent blog post on how I bought 100 shares of Clorox at a $2,600 discount, which I'll link in the description below. Okay, let's get down to the portfolio. We had higher volatility this week with the new COVID variant. I think we're just going to need some time as well as data to see how this all shakes out. As you can see in my trade activity, I had no failed trades this week. So let's walk through the existing positions instead. First up with Clorox, I put on this trade for 191 and it's currently trading at 210, which is a $19 loss. However, the stock is still $8 away from the put with 28 days to go, so I'm leaving this for now. IWM was a rare bearish trade I put on by selling a call spread for 33 cents. As you can see, I'm more or less at max profit, and I'm not sure this stock is going to go from 214 back to 240, which is actually the year's high up here. So I'm likely to leave this just to expire. Now, Pepsi is a little bit more irritating in the sense that it was more profitable last week, but I left it, and now this week it's working against me. The strike of 155 is nearly $10 out of the money, but I may look to close this trade early this week and take some risk off the table. I do have a working order here at 55 cents, which is about 50% of the trade. Now for QQQ, the Nasdaq ETF, I put on a Jade Lizard, which is selling an out of the money put as well as a call spread. It's similar to selling a strangle, but without the unlimited risk to the upside. If you just look at the P&L data, this trade is going horribly wrong. But the stock price is actually about $30 away from both the put and the call. So the position is actually okay. That said, if the stock does drop towards $350 and test my put, I will be rolling down this call spread to collect some extra premium. The nice thing about this trade is that I only sold a $1 wide call spread, which means that if the stock does reverse and go all the way past the call spread, I close that spread for $1 and I still keep 138 of the original 238 premium in profit. Starbucks is similar to Pepsi, where the position was actually profitable last week. But the high IV rank, as you can see here, has inflated option premiums, which is why it's showing a $37 loss right now. It's still $6 out of the money though, and with 28 days to go, I'm gonna leave this and see how this shakes out as well. TXN is another position where it was actually showing nearly full profit last week, but again, high volatility is making option prices more expensive. I'm going to leave this to expire worthless, or if it does come down to 170, which is where my put ratio position is, I may even make some money on this spread. For VFC, it's similar to TXN, which has a ratio spread as well. However, it does have a lower IV rank, which is why it's more profitable. You can see I put it on for $68. It's trading at 66, so that's basically full profit. But I do have a ratio spread on here as well, and I'm going to hold on and see if the price does drop towards 67.50 in the next 14 days. Finally, WBA is my only long-term position in this account. I was assigned 200 shares at $50 way back in 2020. What I have here is actually a covered strangle, even though I sold this call and this put separately. This basically leads to two good outcomes. Either I get another 100 shares assigned to me at 45, which lowers my overall cost basis, or 100 shares of the stock that I own gets called away at 52.50, which is a $250 profit plus whatever premium I collected, which is 46 cents. The covered call isn't really a concern here, but a $45 put is treading water. Even though I don't mind owning another 100 shares at this price, I will roll this out to January if it's at risk of being assigned nearer the expiration date. That's it for this week. Again, this was my first ever video, so I do welcome any comments and feedback. Until next week, thanks for watching and trade safely.